Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up, and this wrap-up is for Tuesday, and we're at the 15th of June, 2021, about 5:10 in the afternoon. That's p.m. Central Time. Now, the big event tomorrow is going to be the FOMC meeting result. We'll get a statement at 1 o'clock. At 1:30, and this is Central Time, the press conference will begin. But what do you look for? Well, everybody's going to look for change of words, but I think that's not where the focus is. I think the focus is going to be, number one, no change in keywords. I don't think the Fed's going to do too much right here. If they're really data dependent, they want to see more data for a little bit. What I do think you look at is the dot plot. The last one we saw was in March. 4 of the members thought that we might get a rate hike in 2022. We'll see if the others come rushing into 2022 or stay further back. Am I wrong? Well, I could be wrong. Maybe the Fed does say something in a word change that makes everybody think the tapering is going to come. If that's the case, the stock market gets hit. If that's not the case, I'll give you the simplicity. It's probably bullish. The stock market keeps interest rates pretty flat at that point in time, probably friendly the gold market after a washout in that, a little bit bearish in the dollar. Energies are in a different world. They're just on their own. I think they're getting vastly overdone on the upside. That does not mean I'm bearish. I just think they're ahead of themselves. It's like when copper was at $4.90. It's like when D's corn was pushing $7. It's like when lumber was up 40% higher than it's at today just recently. That's all I'm saying. But as these numbers come down, you still have $5.70 corn. You still have lumber that's sitting here well above what the old norm was. And now the people that are out in Canada, the millers, they're saying if it gets back to the norm price, they might not produce as much. So you get used to higher numbers, you invest money, and you have to recoup it. That's basically what happens. As we look at the gold chart, you can see you've got a correction, but it's not very much. We're down 0.7 for the week. Now, if I come back and go, last week you were down 0.66. This week you were down 0.67. So you add it up. 0.67, 0.68, what, 1.3 or so, 1.4, and now you add that to it, so you're at 2% correction so far from the short-term peak. That's one of the ways that I look at the market to see how much of a correction is taking place. When I look at the weekly chart or the daily chart, it rolled over. No ifs, bands, or whatever you want to talk about there. You still have the pattern of lower highs and lower lows. That's bearish. The market is trading underneath the 18-day average of closes. That should be the resistance point on the way up. Doesn't have to be, but it should be. And the support point is the 200-week average, which it was here, and it's proving itself to be. The old is often the new. Keep that in the back of your mind. Where's the Bollinger Band? Well, I'll be a son of a gun. You got through it yesterday. You're right back fighting the battle today. You stayed under it. So you were under it today. You were under it yesterday, 2 days in a row. I don't know what today's going to do. We just opened in the marketplace, but I'm looking for that to be major support in the 1853 area. It'll take a surprise out of the FOMC in a negative manner where the tapering is coming for that market, in my opinion. Does not mean I'm right, to get hit and hit hard. If that happened, could you go to 1800? Sure. But what if it's the opposite? Nothing happens. Did you overdo yourself on the downside? When you look at the slow stochastic, you're oversold as can be. You have an oversold market that's in major support, had been in a downtrend, hit objectives. Plain English. Gold-silver ratio. On rallies here, which means where gold gets stronger than silver, expect a lot of resistance at 67, 68. I'd be looking on this chart now if you get back under this low, which was 66.55, to say that, the market isn't going to go back there. It wants to work its way back down into these numbers in the short term. Just a momentum idea. When I look at silver, what's the number that is supporting the market? Come on, look at the Bollinger Band. Right through here. So you have higher lows, higher highs, going basically sideways in the market. When I come over to the copper market, I have a higher high, lower low. You were underneath the band today. The market got hit in copper hard, 4.29% decline. Why? I had told you, Asia was on holiday. So with that holiday, you didn't have the Hong Kong market, you didn't have markets open in other parts there like Australia and so on. Everybody came back, and the first thing they're doing is hearing, oh, the government wants to release those stocks. Boom, away you go down. Those stocks being aluminum, copper, and zinc that have been, if you will, stockpiled by the Chinese government. Speaking of China, I gotta love this. The G7 comes out with its statements, you know, and they're unifying against China. So China did what China always does. Do they care? Nah. How can they show it to you? They take 28 military aircraft and they fly right into Taiwanese space today. That's the most they've done in recent times. That's the answer as to what China thinks of the U.S., the G7, trying to tell them what they're going to do. If you don't understand what's going on in the mentality there, maybe you should read some books on it, because they're not going to pay attention. And guess what? This sets you up for the Putin-Biden meeting. Can you imagine that? Our president is going against a KGB officer, the hardest core one, a dictator for all purposes in Russia. It's not a democracy, it's a dictatorship there. They call it a democracy. If you don't like what they call it, well, then you go to jail. And so to make the long story short, they're going to meet. Do you honestly think anything's going to come together? They're going to have a 5-hour meeting. About what? Really, what about? All right, I don't see this going anywhere positive, but the president has to go through his parts of it. He'll call him a worthy adversary. They won't come out calling each other names, but they're not going to agree on anything. So that's another known. In the platinum market, you got higher lows, higher highs, but you're staying under the 18-day average. Bias down, oversold market that's got a bounce in it. That's how you look at it. The palladium is still in a downtrend, but does it have enough momentum to make the run at the lower Bollinger Band? I'm not sure it does. If it does, terrific. There's nothing here that's a buy signal. You've got the lower highs, lower lows, and there's nothing new that would make me, for example, tell my clientele, oh, I think you should go short. Sure you should when you're oversold. Oversold doesn't attract new sellers. Embedded readings do when you lock in downtrends or uptrends, but not just the ups and downs of the market in an overbought or oversold condition. Dollar index, 3 times in a row, you're hitting the upper Bollinger Bands. You don't have to believe me when I tell you that these markets make runs at Bollinger Bands and they act as brick walls often. And that's what goes on. Walls get knocked down. They get pushed back by contractors. You're on my property line. That's okay. But this is more or less sideways action. Now the question is, does it get a piece of news that no one is ready for where this market just makes a move off tomorrow's FOMC meeting? That's the danger of going into FOMC meetings. And why this one is important is that dot plot. We haven't seen one in a while. Higher lows, higher highs, and Ethereum right into the brick wall of what? The line in the sand, the 18-day average of closes. You know, one of the things I believe in is one of the best courses I ever created was this enhanced Bollinger Band course. People ask me often, Ira, if you had to pick an element that you wanted to work with, and let's assume there was one study that you'd pay attention to. This is it. This would be the one. Now, I put out my regular charting course, and I wouldn't forget how to work with moving averages, momentum oscillators, swing lines. I think it's so important. But once you have all that under your belt, and that is the prerequisite, once you have that under your belt, and you're looking for something that is simplistic, that I think you can learn to stick with, well, this could be it. I'm not saying it is. I think it could be. With the course, you get a 14-day trial to our complete futures research. We want to show you what we do every day. I want you to see the morning subscriber video so that from there, as you're learning this, you tie it all in. I want to reinforce it. You get 2 weeks to do it. You'll complete this course in 13 videos in a day or two. And then let me keep hammering that in. You're going to get a trial to our charting software so your charts do exactly what mine do. I know that a number of you out there can't quite get your charts to do what mine do. You know why? I use a little bit of a different study, but our charting software has it built into there. That's why it's a little bit different, okay? Use my charting software, it's built in. How do you get this? Go to iraepstein.com education. You can also give my staff a call, they'll get you set up right away. I'm Ira Epstein. We did have a webinar today. I know there were some glitches. I heard that screen stuck. We're debating when they have the very next one. I don't have the time to really do it this week. So now the question is, do I set one up for this coming Monday or Wednesday? Wednesdays and Thursdays were the two most popular days. I see that. So now the question is, how do I fit it in? I'd love to knock off 2 fast ones a week for you. That's the reason why. I'll let you know what I come up with. Have a good day.